Let's bring Dave Williams in first. Dave, welcome to the show. Thanks for being here.
Thank you, Michael. It's a real pleasure to be here today with you.
My pleasure. All right. I want to give you a full platform for what the trades are that you see happening, but can you give us a flavor for how you see 2018 unfolding as we go forward this year?
Sure, absolutely. First of all, we're very excited about 2018. From a fundamental viewpoint, we like the direction of the administration, where we're focusing and attempting to improve the economy specifically by the tax reductions and by increasing the incentives for companies to come back to America, the kinds of things that I think we may have lacked for some period of time to refocus our attention on the economy. Now, I think a lot of what I just said is being reflected in the current rally in the stock indices, Mike. The S&P 500, the Dow, many other indices, Russell, NASDAQ, and so on, are expressing their pleasure, their agreement with the direction of the company, of the country. If things do really improve, and they already have, we can all sense it. I think we can all agree there's been a somewhat dramatic improvement already. It can't but have any meaning except it's good for business. And the stock market often reflects, in these rallies, the happiness, if you will, over improved business conditions and economic security and outlook for the country.
Okay. We're looking at all new highs today on the S&Ps.
Yes.
You were thinking, well, let me back up. You tell me what you're thinking, and I'd love to hear about not just the stock market, but I want to give you some room to talk about what you think about the dollar, what you think about crude oil, because there's a lot of geopolitical stuff going about all of this stuff. So take it from there.
Yeah, absolutely. I think that people that are in stocks are in the right thing right now, and they continue to be. We mentioned on your program a couple days ago, we're looking for the fourth or the fifth likely to mark some kind of top. We're not talking about a huge top, Michael. We're just talking about perhaps for a multi-day decline. But today is the fifth, and the market has continued. So we're at the outside edges now, coming into next week for the market to complete potentially some important levels. We had forecast for your listeners who may be knowledgeable about the S&P. Early in today's session, we forecast that in today's sixth trading hour of the S&P, that the S&P, which then this morning was trading down at 2731, 2732, that the S&P in the sixth hour of trading today would be testing 2737 to 2738. Michael, right now we're in the sixth hour of trading today. Our customers, as you know, are all over the world. It's all recorded on our meetings. Today's the sixth hour high is 2738.25. That is something that we do for our customers to give them an intraday advantage, to have a very high probability of a very specific price in the stock indices that'll be touched at a very specific point in the day. So very happy to say that not only is the stock market continuing higher, but it is focusing in on these numbers and time targets that we have, which can really be useful in trading the market intraday like some of your guests and listeners do.
Now, being that we are at that point, right, you are looking for some kind of if we do have a pullback, that'd be Tuesday would be the, turnaround Tuesday?
Yeah, something like that. We're not going to step in front of the freight train and try to, turn it down ourselves. We're going to wait for a little bit of confirmation. But the rally that this market, the Dow, the S&P, has experienced since December 29 has been larger than usual. So we're going to use caution on that. But as you know, Mike, when we finally do come out with a forecast for the market to turn down and something that's actually tradable, we will have done our homework thoroughly to make sure that our clients worldwide are in the right position to take advantage of that move, as opposed to possibly being on the wrong side hoping for further advance. When the natural ebb and flow of markets does come in, it doesn't mean anything bad. If the market has to come down that often is just part of the natural, and it is part of the natural movement of markets, commodities, stocks, even things like Bitcoin. And Mike, speaking of Bitcoin, a couple of days ago on your program, because I'm normally on a different segment, but a couple of days ago we had made a forecast for Bitcoin. Back on January 3rd, we indicated that Bitcoin would be trading, at January 3rd they closed at 15,000. And we indicated that Bitcoin would touch 15,800, 15,900 coming into Monday of next week, plus or minus one trading day. Today is the minus trading day. Today is Friday. And they rallied powerfully today up to 15,900 and beyond. Bitcoin today is up at 16,533. The Bitcoin is, I just want to express one other idea, and I'd like to let you in on this, but you and I both know, and I think many of your listeners know, that Bitcoin's volatility is so intense that it actually is difficult to comprehend. Let me give you an example. The Bitcoin itself can, in a single day, can move the entire amount in points, can move the entire value of the S&P 500. The S&P 500 is at $2,738. Bitcoin can move $2,738 in a single day. All the time it took for the S&P to go from its beginnings, literally in the 90s when the futures contract came out, up till now to get to the levels that we're at, Bitcoin can traverse that a number of points, Michael, in a single day.
That's pretty impressive.
That's pretty impressive.
Yeah. Do you find that I have found, having been a trader and a market timer myself in the past, that when you have that kind of volatility, it portends a truer market. And it makes it actually easier to call it. Do you find that?
Yeah, absolutely. That's a really insightful, if I may say so, that's a very insightful point. One that would not necessarily be made by somebody who hadn't been through the time it takes to become a market timer and study the markets and so on. The more, if volatility is at least normal to high, markets are doing what they most normally are going to do. When volatility drops off below normal, markets get range bound, ordinary targets that would be reached don't get reached. The market is really building up pressure. And this happens to any market. But Bitcoin, even on a really bad day, is going to still have enormous, powerful trading opportunities, investment opportunities. So yes to your question. And secondarily, we are so excited, Michael, about the prospects of trading the futures contracts for Bitcoin. We can hardly contain ourselves. We just recently started forecasting in it, and we'll continue to forecast exclusively on your program for your audience what our next move in Bitcoin is going to be, and so on, in subsequent programs.
Great. Thank you, David. All right, we'll see you later on in the show. That's all the time we have for now. All right, you're welcome. David Williams, Pagetrader.com. Try a free trial with what he's doing. You'd be amazed at the accuracy that you can see real time with what he does. We're going to take a break. On the other side, we'll be back with Ed Baxter and the Private Equity Spotlight.